Hello, traders. Gary Wagner with the Gold Forecast here on Thursday, the second day of November, about 9 o'clock here in Honolulu, Hawaii. And this is the Daily Report. Gold currently trading well off the highs that it had most of the day, still printing a higher price tag, trading at about $3.20 higher, and it is currently trading at $13.89, $13.90. We do have a weakening U.S. dollar that is accounting for about an $8 positive rise in gold. The push part is some selling going into the market, giving it a negative $5 on the day. Net change plus $3 to the upside. On today's report, I'm going to talk to you about a couple of areas that I'm looking at in terms of targets, how I think the market is trending and trading. We'll take a quick look at silver also today, all on today's daily report. Just one note that I do want to speak about very, very briefly. As you know, yesterday I went ahead and we put up our Andrews pitchfork. I am finding a couple of interesting correlations that are going on, and let me spend a couple of moments to talk to you about that. Of course, we drew that. That requires 3 data points. We took this low, and this high. This, of course, we're using a 240-minute candlestick chart. When we draw that, of course, the 50% line, this becomes our handle here. This is 50%, but I've also added a 38%, that's right in here, and then this, of course, is 0%. What we're looking at, of course, is first of all that upper level resistance. One of the reasons that I like the Andrews pitchfork is that as the market moves, this line tracks higher. In other words, it moves with the trend itself. The one thing that I am noticing is that it does seem, at least on a tentative basis, to be tracking pretty well in terms of some strategic resistance. As I said, I believe that our real next resistance level is going to be 1400. I don't really think that we were going to have any problem taking out the 1390. Right now, as I said, we're trading right in that area, but to me the critical area was 1388. That's based on these tops in here. So that as soon as we took those out and effectively formed a base, and as you can see, this is that base that we're forming, my sentiment is that it is no longer resistance, and it is truly forming a base at this point. Now, we'll have to see if that base holds, of course, but at least for right now, I see that that's comfortable. But the other thing that I am noticing is that the lower trading range, in other words, these highs and lows that we're seeing, as you can see, we are pretty effective in tracking these lows here, and these lows seem to be following really, really well in terms of this Andrews pitchfork, and so do these highs. Now, we realize that the market itself is trading in a channel. It's an upward channel, so we're going to have really a marketplace within that channel that tends to trade to the highs and then to the lows and then to the highs. Now, I am certainly not a day trader, but this type of information for those of you out there that are either looking to buy the dips and to add positions, or for those of you who have joined the service recently, we're not able to take advantage and buy in at the 1354 and are looking for target placements. We would highly recommend using this channel to be buying these particular dips in the market as the market continues to move up. Also, as long as it trades within this upward channel in here, my sentiment is we've got a good upward track that will continue to trade higher. For those of you who follow my weekly commentary on Kitco.com, you recall that on Monday of this week I spoke about that 3 Buddha pattern, and the fact that what I believe was going to happen was, rather than a head and shoulders, we would see something similar to what's called a 3 Buddha reversal. In other words, on a typical head and shoulders, you've got your left shoulder, the head, the right shoulder, and the market continues, breaks down, and goes lower. I got a lot of email with many concerns about this formation possibly coming into fruition. My belief was that it would be what is typically called a reverse. Now, what I mean by a reverse is you do get the left shoulder and the right head, but what happens is when the market comes down and then moves up to form that right shoulder here, this becomes that critical point. And as long as it breaks above that, you actually get a key reversal. Now, I do have a subscriber. His name is Seng. He's been with us for quite some time. He's, besides a subscriber, he's an excellent trader and technician. And what he had emailed me on was that what he saw was what's called a cup and saucer formation. A cup and saucer formation is where you get in essence, a rounded bottom. And this is, of course, the cup in here. And then you get what's called the handle. This would be your handle here. And then when the market breaks above that handle, you have a breakout to the upside. It's basically a Western technical chart formation. And I felt that it was an extremely insightful call. I do agree with this call. I also agree that this is a cup and handle formation, can be absolutely looked at in that way, and I did want to point that out. As far as our gold position goes, I do believe that we want to maintain our current position. We also want to maintain our stop. Gold as it trades right now is trading actually unchanged to about 50 cents lower. Lastly, I do want to talk about the silver market. I will be starting a newsletter specifically devoted to silver. For those of you who are interested in tracking and trading silver and would be interested in subscribing to the service, simply email me and let me know your interest and we can get you all set up and signed up. But here's what I'm looking at. Right now, I believe that there's incredible upside room for silver. It's really been explosive. It really has broken out. This is the Andrews pitchfork. What I'm looking for, and this is based upon some Fibonacci extensions that I did, but I'm looking for a price of about $31 to $32, and I'm looking for that price in terms of time frequency. It could be as soon as February of next year. I believe that it's been on an upward track. In terms of outperforming gold, I don't know, but I do believe that there's also opportunity in that. And as I said, it warrants our attention. If you have interest, simply email me and let me know. This has been Gary Wagner with the Gold Forecast, wishing you, as always, good trading, and we'll talk to you tomorrow. Bye-bye.